Precious metal still seeing new highs in the market. Let's go to David Burrows on this. He's CEO and CIO of Barometer Capital Management. David, thanks for joining us today.
Great to be here.
So gold closing in on $5,100 US an ounce. What's your take on the run for precious metals for 2026?
You know, it's interesting. Really, the gold and the silver started rallying almost 2 years ago. And it's funny how, at this point, lots of press and lots of focus. The truth is that precious metals bull markets tend to go on a long time. When precious metals start outperforming indices like the S&P, historically, it can go on for 8 or 9 years. Having said that, in some ways, if you look at, for instance, the price of silver, it is going a little bit parabolic here. The chart has become a little bit gappy. There's obviously a short squeeze going on. And so when we look at this, we have to pull the lens back and say, okay, look, the long-term picture is both gold and silver look like they're going higher, and certainly the producers you would expect to go along with it. In the near term, I do think that we are getting stretched, relative to the longer-term moving averages. If you look at the bull market in the 70s, silver got to about 230 or 240% above the 200 weeks moving average. And as we sit today, we're closing in on 300% above. So, things are getting stretched by a little bit. And I think that people have to be a little bit careful. Easily, we could see a 25 or 30% correction. But having said that, if you have an iron stomach, which I don't, likely there will be 2 or 3 legs of this bull market, and it'll go on a long time. So in the short run, a little bit overcooked. Longer term, probably still a very good opportunity. Very few people are invested. Most people have watched this go on from the sidelines. Okay, and you are saying that kind of correction for silver alone. What about gold? Yeah, I think that gold probably also corrects. They tend to move in tandem. Gold goes first, silver goes second. I think there's more speculation around silver, and there's probably more of a short squeeze in silver. If you're going to be there, my suggestion at this point is you probably want to be in the senior producers, and you might want to take some profits on some of the juniors. Not to say they can't go farther, but in a reversal, if the seniors pull back 25 or 30, the juniors could pull back 40 or 50, and I'm not sure many people have a stomach for that. Okay, let's get to some earnings. We had the grocer Metro reporting and a loss there. They're calling it a challenging environment for 2025. Was there anything out of the ordinary that fed into this? No, I think that people look at Metro and compare it to Loblaws, and Metro's done a very good job, but really they are less consistent than Loblaws is. And frankly, if you look at the sort of consumer staples sector, this has not been a leading sector in the market. And so I'm not sure they're getting much of a tailwind from the sector. So we're just a little bit cautious, and we have not been focused in the defensive sectors because, frankly, it's the economically sensitive sectors that are really performing, especially, as a follow through from 2025 into the first month of 26. The market is rotating towards cyclical stocks. And so, Metro, not the number one stock in the group, the sector, not the number one sector in the market, just probably less flows than you're seeing in other areas. Okay, I should have mentioned this after gold with the run up in gold, but the U.S. dollar is still sliding now into a fourth day. Big picture, is that just sort of big picture driving it, sort of the geopolitical uncertainty, Donald Trump tariff threats, that kind of thing? Yeah, I think actually the biggest story right now in the market is the U.S. dollar. Over the last 15 years, while international stocks really underperformed, I mean, they had no return for over a decade. And while the U.S. dollar was rallying against virtually every world currency, global investors outside the U.S., bought dollars and got a carry on the dollar going higher, took those dollars and bought U.S. Treasury bonds and bought U.S. stocks, because it was the only game in town. And, after 15 years of doing that, they're probably maximum long U.S. stocks. And at this point, we now have the dollar weaken against virtually every major currency. It is not just pulled back, it's broken sort of all of the support. And so with a weaker dollar and much stronger international stock markets, there is incentive, first, not to put more money in the U.S., and second, probably to repatriate some to home markets. And international stocks are a lot cheaper than U.S. stocks. They are not well owned. And so I think all of our jobs is try to get in front of these big structural changes. And this is where there's, I think, great opportunity for this year and going forward. Probably international stocks outperform for the next several years.
Okay, so along those lines, you have one or two picks you like?
Yeah, I think one of the areas that does well when there is an elevated inflation risk, and you can see that long-term bond yields have been sticky and staying higher while short rates are going down. That tells you bond investors think there's going to be a little more inflation. The materials sector, which of course has been a champion in the month of January, following through from what happened in 2025. And there's some great global players there. A great way to participate in multiple commodities is Rio Tinto. It's a very well diversified commodities producer. And over time, they have a history of paying special dividends. And we're seeing the price of copper rally. We're seeing, of course, the price of nickel rally. We're seeing, of course, gold and silver. And some of these companies are going to be great dividend growers over the next number of years with really strong international assets.
Okay, I do have to leave it there. I'm out of time with you, David, but thank you for your time. Appreciate it.
Thanks for having me.